Okay, let's dive right in. Today we are taking a deep plunge into the future strategy of Nvidia. Really significant company right now.
Absolutely. And we're focusing specifically on something that's generating quite a bit of buzz, this idea that NVIDIA might be seriously ramping up its acquisitions.
That's the core, yeah. We've been looking at some source material, basically excerpts from an article that really tries to break down why. Why might they be looking at more M&A?
Exactly. Digging into the signals, the underlying reasons presented in the sources that suggest this potential increase in mergers and acquisitions is coming.
Our mission here, for you listening, is really to unpack that. We want you to come away understanding the evidence the source material lays out for this prediction.
And grasping why this shift might be happening, right? What's the bigger picture for NVIDIA in the market?
Yeah, because let's face it, Nvidia is dominant, especially in AI.
Hugely dominant. So any move they make, particularly around growth strategy like M&A, well, it's critical to understand.
And these sources, they offer some pretty interesting clues, don't they? Kind of pulling back the curtain a little bit on their thinking.
Don't you? It's fascinating stuff.
Okay, so let's get into it. The source material kind of grounds this whole discussion in NVIDIA's history first, right? It mentions past deals.
Yeah, it points specifically to the Mellanox Technologies acquisition back in 2020. That was, what, $6.9 billion?
Right, and the source called that one A.
A huge winner, explicitly, because bringing Mellanox in really beefed up their data center networking capabilities, which obviously works hand in glove with their GPUs.
Okay, so that success kind of sets a precedent. It shows they can do these big deals, integrate them, and make them work.
Exactly. It frames future M&A as something they've proven they can execute well.
So, okay, past success is one thing, but what about now? What signals does the article point to suggesting an increase is actually coming?
Well, one of the first things it flags are public statements, comments from key executives.
Like who?
Specifically, NVIDIA's CFO, Colette Kress. She apparently spoke at a UBS conference back in December.
Okay, and what did she say that caught the source's attention?
According to the reporting, the source cites, she talked pretty directly about the chance to bring on great teams in some M&A form.
Bring on great team.
Yeah, and she called it a great opportunity for us to do. Coming from the CFO, that kind of language, well, it usually carries weight.
Yeah, that doesn't sound like just casual chatter. It sounds pretty deliberate, especially from the person overseeing the finances.
Right.
But the source didn't just rely on executive comments, did it? It looked at something more tangible. Hiring.
Exactly. The author mentioned keeping an eye on NVIDIA's job postings, sort of using it as a way to, get a pulse on their priorities.
Okay.
And they noted finding 2 specific job openings related to M&A fairly close together, which they felt was, well, unusual compared to what they'd seen before, significant even.
2 M&A roles. Interesting. What were they?
One was for an M&A and integration activities lead for HR.
HR integration. So dealing with the people side of bringing companies together?
Precisely. The description talked about partnering with the corporate M&A team through the whole process, evaluating targets, integrating them post-close, working across HR globally.
That sounds pretty strategic. It's not just identifying targets, it's actually figuring out how to absorb them effectively.
That's the idea. And the other role was a senior manager, M&A accounting, posted late May, apparently.
Okay, M&A accounting, so the financial nuts and bolts.
Right. Evaluating the deals financially, making sure the accounting treatment is correct, handling the financial integration after the deal closes, optimizing outcomes, all that complex stuff.
Got it. So one role for the people side, one for the financial plumbing. And the source interprets finding these specific roles as what?
As NVIDIA actively beefing up its internal capacity, getting ready for more deals, maybe bigger deals than they've typically done. Especially considering the source mentions, NVIDIA generally has low employee turnover.
So the thinking is these aren't just backfills, but a deliberate expansion of their M&A muscle.
That's the interpretation presented in the source, yeah. Building the operational capability needed to handle more M&A activity.
Okay, so we've got signals from the CFO's comments and signals from the ground level, these specific job postings. But deals cost money, big money.
And this is where the source really drives the point home. NVIDIA's financial position.
The balance sheet.
Their mighty balance sheet, as the source puts it. It notes that, as of a recent report, they had something like $52.7 billion in cash and equivalents.
$52.7 billion. Wow. And their debt.
Relatively low, just $8.5 billion in long-term debt, according to the source.
That is a huge war chest.
It is. And maybe even more importantly, it's growing incredibly fast because their free cash flow generation is just off the charts.
How fast are we talking?
The source says over the last 4 reported quarters, Nvidia generated around $72 billion in free cash flow.
$72 billion in 1 year.
Roughly, yeah. And get this, over $26 billion of that was in just the most recent quarter mentioned.
Unbelievable. So they have a massive reserve, and it's being refilled at an incredible rate. How does that stack up against competitors? Does the source compare?
It does. It specifically looks at AMD, Intel, and Broadcom.
Okay, what's the picture there?
Well, AMD's balance sheet is solid, but their cash pile is much smaller than Nvidia's. Intel is described as having a lot of long-term debt compared to its cash. And importantly, the source says Intel was generating negative free cash flow, so spending more than they're bringing in operationally.
Oof. That makes big acquisitions tricky.
Definitely. And Broadcom. They do generate strong cash flow, but the source also points to a substantial long-term debt load that needs servicing. Takes up cash.
So putting it all together, Nvidia isn't just strong financially in a vacuum. They have a serious advantage over these key competitors, specifically when it comes to funding M&A.
Exactly. That balance sheet, that cash flow, it gives them flexibility and firepower in the M&A market that, according to the source's analysis, the others just can't match right now.
Okay, so they've got the potential means. They seem to be building the operational readiness. What about the motivation at the very top? Why would management and the board want to do more deals?
The source points to a pretty strong internal incentive. Personal wealth tied to stock performance.
Ah, the alignment of interests.
Right. Figures like CEO Jensen Huang, board member Cox Tench, CFO Kress, they hold significant amounts of Nvidia stock.
Makes sense.
And the argument presented is simple. Smart acquisitions that boost profit growth tend to drive the stock price up. So M&A isn't just a corporate strategy. It directly aligns with the leadership's personal financial interests.
So doing deals that grow the company benefits everyone, especially those steering the ship whose wealth is largely in company stock.
That's the connection the source draws. M&A is seen as a powerful tool for value creation, benefiting both Nvidia and its key stakeholders.
Now, we touched on competitors when talking financials, but the article also lays out how they compete, right? Which seems relevant if we're thinking about potential M&A areas.
Well, yeah, it gives some context on the competitive landscape. It notes AMD and Intel are trying to compete with Nvidia in those discrete GPUs for data center AI.
Although Nvidia has a massive lead there, according to the source.
The commanding lead. The source cited a 92% market share estimate for Nvidia in that specific segment for 2024.
92%, wow. Okay, what else?
AMD also competes in gaming GPUs, and then there's Broadcom.
Right, Broadcom, where do they fit in?
They compete in data center networking, remember, the area where Nvidia bought Mellanox. So that's a key adjacent space.
Okay.
And Broadcom also designs and makes ASICs, application-specific integrated circuits.
Custom chips, basically.
Yeah, chips designed for very specific tasks. The source mentions that sometimes in data centers, these ASICs are used for certain jobs instead of GPUs as alternatives.
Okay, so the competitive field is GPUs for data centers, GPUs for gaming, the networking infrastructure connecting everything, and these custom ASIC chips that can sometimes do similar work. That helps paint the picture.
Definitely. And understanding that landscape is important because M&A could be used to strengthen their grip on GPUs, expand further into areas like networking, or maybe even address challenges from alternative approaches like ASICs.
Right. So let's try and wrap this up, pull these threads together. The core idea from the source material is that Nvidia looks like it's gearing up for more acquisition activity.
Yeah, and that prediction rests on several pillars according to the source.
Okay, let's recap them. There's the history, right? The success of Mellanox showing they can do it.
Then the recent kind of explicit comments from the CFO signaling M&A is seen as an opportunity.
Plus the tangible evidence, those specific M&A job postings suggesting they're building the internal team, the capacity for more deals.
And critically, their financial position, that huge cash pile, the massive cash flow, giving them way more M&A firepower than competitors mentioned in the source, like AMD, Intel, and Broadcom.
And finally, that internal incentive leadership's wealth being tied to stock performance, which M&A can help drive by boosting profits.
It's presented as a whole confluence of factors, strategy signals, operational readiness, financial power, and motivation, all pointing in the same direction. Potentially more M&A.
So understanding this potential strategy shift, It's really valuable if you're following the tech sector, or Nvidia in particular.
Absolutely. It gives you a lens to view future news, potential deals. You can see them not just as random events, but possibly part of this larger, well-funded strategy the source describes.
A strategy perhaps aimed at using those resources to maintain and even extend their lead in the markets the source outlines.
Exactly.
Which brings us to a final thought for you, the listener, to chew on. And this is based only on what we've discussed from the source material today.
Okay.
Given NVIDIA's incredible financial strength, that massive cash flow, given their described dominance in data center GPUs, that 92% share, and given that the source specifically mentions competitors operating in related areas like data center networking, and also in alternative tech like custom ASICs.
Right, those specific areas mentioned.
If the source is right, if NVIDIA does ramp up its M&A, what types of companies or technologies, specifically within those complementary or alternative areas the source highlighted networking, ASICs might be the most strategic targets for them?
It's about connecting the dots, isn't it? Where could that financial power that the source details be best used to either build out their ecosystem or maybe counter those competitive pressures based only on the map the source provides? Something to think about.